Well, Akin Oyedele is a deputy editor of investing at Business Insider based in New York. He's been following developments and he joins me now on the line from New York. Thank you very much indeed for taking the time to talk to us this evening. Let's start with your reaction to the way China has responded aggressively to these US tariffs.
It's not surprising, and thanks for having me. It is no surprise because what we saw on Wednesday was, Trump unveiling tariffs that the entire world, whether that's the political class or the investing class or the economic class, the entire world was shocked by, because it was magnitude greater than what had been anticipated. And so it's not surprising to see a country like China, which, has considerable leverage in this tit for tat game, come with its own aggressiveness and try to, if not match the US's tariff, at least sort of put forward a show of force to say that, they're not going to take this lying down. So it's not surprising, but markets clearly do not like the fact that, we are, like you say, in pretty much a full-blown global trade war.
Yes, we're going to get to the markets in a minute, and I know, of course, you have a lot of interest and focus in that area. But how much of a major blow do you think these Trump tariffs are going to be to the global economy?
They will be a significant blow. That is for sure. Or if nothing changes, in the short to medium term. In the US, for example, in the last hour, the Federal Reserve chairman was speaking and said what everyone was thinking, that this is going to be inflationary. We know that, for example, at least here in the U.S., the Fed has been combating the worst inflation in decades, for the better part of the post-pandemic period, and so this is another input that's likely to accelerate inflation. We're likely to see the same thing play out across the world because, tariff is essentially a tax on goods coming into a country. And so one would really expect companies to pass on some of those costs, if not all of them, to consumers. And so um, y- at the rate things are going, we can expect higher prices. We can expect the cost of living to intensify even more. And again, the last 5 years, we've seen the cost of living rise considerably in the US, in Nigeria, in Europe, and this is just sort of a compounding factor. So it's if nothing changes, it's going to be a lot of pain on people's pocketbooks, and that really is the main pain point, at least from an economic standpoint, and everything sort of spirals from there.
And of course, from your considerable experience in that world, I'm sure you know that there are essentially two options here in terms of a tactical response to these US tariffs. One is to hit back hard, which is what China has done. The other is to go down a rather more placatory route of negotiations. Which would you say is more likely to happen?
I wish I had an answer either way, because that is the question that everyone's scratching their heads trying to figure out. We know, for example, at least on the US side, that President Trump doesn't seem likely to back down anytime soon. We also, it's also a political game, and so he knows that if he, even in the course of negotiations, appears to be softening his stance, that's not going to look good politically for him or for his Republican colleagues. So there's that, that sort of complicates the negotiation part of things. And then in terms of, escalation and tit for tat going back and forth, that's also likely because countries, I think, will say, how far can we stretch the rubber band before it snaps? And so, again, I wish I could answer either way, but right now, and part of why there's so much uncertainty about this is that no one really knows how this ends because this is the first time we're seeing the world's largest economy come out swinging like this with tariffs against every country in the world.
Well, I actually think you've answered it rather well. And just picking up the points that you made there, I mean, I heard the Trump administration, one of their spokespeople saying, reiterating today that they're going to be totally resolute, even obstinate with the enforcement of these tariffs. I mean, is that likely to make the markets more or less confident, or are the markets reacting more to the warning about a possible global recession?
So it's likely to make the markets less confident and the markets reacting to the possibility of a global recession. So I think it's both. The saying sort of around Wall Street for the last couple of years has been take Trump seriously, but not literally. And now, well, people are waking up to the reality that this is a man who does what he says he will do. And he's doing it on immigration. He's doing it, in his first term, he did it on tax cuts for that sort of benefited the predominantly wealthy. And he's doing it now on trade. Trump has been talking about tariffs, for decades, and he is somebody who feels like the US is being taken advantage of, and he is keeping his word. He feels like he got elected and survived two assassination attempts to deliver a very specific set of uh, deliverables or things to the American people, and he's doing what he said he would do. So that's part of the scare here is that this is somebody who, even with all the market turmoil we've seen in the last 2 days, he's not changing his tune. It's afternoon on the East Coast in the US, and we know that this weekend, I think he's already in Florida for the weekend, so he's not staying in Washington. He's not doing any of the things that, like, in a traditional crisis, quote unquote, the president would want to do. It's sort of almost business as usual for him, at least in terms of the optics of going down to Florida for the weekend. So this is the man he's doing what he said he would do, and that's part of the scare. And at the same time, the market's reacting to the fact that because he's doing what he promised, that's likely to be chaotic for the global economy.
So, just picking up from what you said there, and at the risk of making you repeat yourself, I mean,
That's okay.
does it feel as if this has gone beyond a Trump negotiating tactic, which is what we're sort of used to, and the US government actually wants a fundamental reset, which will take a long time to take effect?
I think so. And, at the risk of sounding wrong in a week from now, I will hedge that answer by saying, we're still it's April 3 today, or April 4 rather, and this was unveiled 2 days ago. So things could change in the coming days. But at this rate, based on what we've seen since what the Trump administration called Liberation Day, they're serious. They are not backing down. If you had asked me this question a month ago, I would have probably said that the sort of pain threshold for the administration would be the stock market, because they do look at that as reflecting investor sentiment and what sort of is being priced in for the future of the economy. But the markets, the S&P 500 is almost in a bear market. We've seen the worst sell-off since the COVID era, and they're not changing their tune. So right now, it is, I think, okay to say that yes, the Trump administration wants a fundamental reset, and they mean business. And we've also heard comments like, well, it's okay if the market, I'm paraphrasing now, but it's okay if stocks sell off, because it's about time that we focused on the working class of people and not the investing class of people. So yeah, they are resolute, and yeah, this is for real.
Well, I mean, let me again pick up more on what you said there, because you are, of course, a bit of an expert in the art and science of investing. Is it fair to say that even though the stock market may not necessarily be the real economy, a lot of Americans are invested in the stock market through things like their pension funds and so on? And so how wealthy they feel is linked to the value of stocks.
Absolutely. I mean, you've just defined what economists call the wealth effect. People feel wealthier when their paper money is rising in value, and when markets are behaving the way they are right now, people feel less wealthy, and that can lead to less spending. So, people sort of putting off big vacations or deciding not to buy a house or even in terms of the capital markets themselves, we've seen reports today of two major initial public offerings being suspended. So, yes, you're absolutely right. The stock market and the economy, they are. I think it's good to think of them more as cousins than twins in the sense that they reflect each other, but they're not the same. But it is, you can take cues from one and sort of extrapolate what the other is feeling. And right now, what the market's saying is that people at this rate, people are likely to spend less because prices are going to increase in the future. And so that's what we're seeing. We've seen in the last 2 days.
And I wonder if there is a sense in those markets and amongst analysts like yourself that this is some kind of an expensive game that the Trump administration is playing, that it's embarking on a sort of radical experiment given the place of the United States in the world economy in the last 60 years or so, and where President Trump now wants to take it.
Absolutely. I mean, almost everything I'm reading and hearing from economists and analysts and other experts is a lot of worry. A lot of people saying that, you can't really call this 3D chess anymore. This is just take it for what it is. This is somebody, a president who wants to redo the global trade order. And so yes, there is a sense, that yeah, this is not just a negotiating tactic, and that you know, again, we'll see what happens in the coming days, but I think people are part of what we're seeing this week is that everyone's finally taking President Trump at his word versus assuming that, he's just saying that the worst will happen so that everybody else changes their behavior.
And so, in summary, as we come to the end of this very interesting conversation, there is a sense in the markets amongst analysts that as a result of these tariffs and counter tariffs, the US economy is going to have drastically less growth and drastically higher inflation if indeed these tariffs stay in place.
If they stay in place, that is correct. The consensus is that we will see more inflation and less growth. We are not yet seeing that many calls for a recession, although, like you noted earlier, JP Morgan has raised its recession odds. I think part of I think sort of to be sure, as we say in journalism, the US economy is coming into this situation with a lot of momentum. We got an employment report this morning that showed that the US economy added more jobs than expected last month, for example. So we have that going. The economy has that going for it, in that it's in a pretty good place. And Trump got handed a pretty strong economy by President Biden, and so it's going to take a while for a lot of this to, if again nothing changes on in terms of the tariffs, it'll take a while for those prices to feed their way into the economy, and then for that to feed into consumer spending. So maybe that's part of the game the Trump admin is playing. Is they understand that the economy is still strong and they've got some time. And the Fed chair this afternoon also, um, you know, mentioned that in terms of what this all means for monetary policy, it's still uncertain, and they still feel like they have some time to figure things out. So that's on the plus side. But then, if there's a landslide and the mud's coming, if it's going to take uh, 60 seconds, it's still going to come to where you are. So that's the sort of the things are cascading towards higher prices and slower growth, and that's never a good thing, especially when it's avoidable. So, in as much as the feeling is that there is some time because the economy is strong, all roads sort of lead to a pretty ugly place where the U.S. economy is concerned.
And on that rather depressing note, I want to thank you very much indeed for your absolutely superb analysis there. Thank you very much indeed. Akin Oyedele is a deputy editor of investing at Business Insider in New York. And unsurprisingly, he was talking to me on the line there from New York.